The most dangerous weapons in modern warfare do not explode. They don't leave craters in the ground, and they don't make the evening news until it is far too late. For the last 40 years, the United States has enjoyed a privilege no other empire in history has ever possessed. It could print endless amounts of money, and the rest of the world would line up to buy it. It was the ultimate financial magic trick. We borrowed to build our military, to fund our deficits, and to fuel the American dream. But there is a golden rule in finance. You can borrow forever, as long as there is a buyer. Right now, the single most important buyer in the world is leaving the room. Quietly, without a press conference or a declaration of war, China is dumping U.S. debt. We aren't talking about a few $1,000,000. We are talking about the systematic liquidation of over $800 billion. This is a sell-off of historic proportions, bringing their holdings to a 14-year low. Some call it a portfolio adjustment. Wall Street calls it a pivot. But if you look at the math, it looks like something else entirely. It looks like the pulling of a financial plug. When the biggest customer stops buying, the price crashes. And when the price of U.S. debt crashes, the interest rates for every single American, on your credit card, your car loan, and specifically your mortgage, are set to explode. The trade war was just the distraction. This is the real event. Welcome to the bond massacre. To understand why this is terrifying, we first have to understand the boring, unsexy asset that holds the global economy together, the U.S. Treasury bond. Think of a Treasury bond as a simple IOU. The U.S. government spends more money than it makes, trillions more. To fill that gap, it issues bonds. For decades, China took the dollars they earned from selling us iPhones and sneakers and recycled them back into buying these bonds. It was a perfect loop. America got cheap goods and cheap loans. China got a safe place to park its cash and kept its currency artificially low to boost exports. This relationship was the engine of globalization, but that engine has stalled. The loop is broken. We are witnessing a structural shift in the global order. China is no longer content to fund American overconsumption. But here is the problem. The United States is currently $35 trillion in debt, adding another trillion every 100 days. We need buyers now more than ever. When China sells, two things happen. First, the supply of bonds on the market floods. Second, to tempt anyone else to buy this debt, the U.S. Treasury must offer a higher reward. That reward is the yield, or the interest rate. Here's the mechanism you must memorize. When bond prices fall, interest rates rise. If China dumps $800 billion worth of bonds, the price collapses. Yields skyrocket. And because the U.S. Treasury yield is the risk-free rate that underpins the entire global financial system, when that rate goes up, the cost of money for everyone, everywhere, goes up. This isn't just about geopolitics. It's about the solvency of the American system. History tries to warn us, but we rarely listen. The idea of using debt as a weapon to bring an empire to its knees isn't new. In fact, it has happened before, with devastating precision. Let's go back to 1956, the Suez Crisis. The British Empire was fading, but still projected power. When Egypt nationalized the Suez Canal, Britain, France, and Israel launched a military invasion to take it back. They didn't ask for American permission. President Dwight D. Eisenhower was furious, but he didn't send troops to stop the British. He didn't need to. He simply looked at Britain's balance sheet. The UK was heavily in debt from World War II, much of it owed to the US and held in sterling reserves. Eisenhower threatened to sell the US holdings of British sterling bonds. The threat alone caused a panic in the pound. The British currency began to collapse. If the US triggered the sell-off, the UK economy would have been obliterated overnight. The British Prime Minister, Anthony Eden, had no choice. He ordered a humiliating withdrawal. The lesson? You cannot be a global superpower if your rival holds the mortgage on your house. The moment the US threatened to sell the debt, the British Empire was effectively over. Fast forward to October 2022. The United Kingdom again. Prime Minister Liz Truss announced a budget plan that involved massive borrowing. The bond vigilantes, the investors who buy government debt, looked at the plan and said no. They stopped buying UK bonds, known as gilts. In fact, they started selling. The yield on UK debt went vertical in a matter of hours. Pension funds, which hold these bonds as safe assets, suddenly faced margin calls. They were hours away from insolvency. The Bank of England had to step in with an emergency rescue to print money and buy the bonds, just to stop the financial system from imploding. Liz Truss resigned after 44 days. The market defeated the Prime Minister. Now, look at the United States today. We are not facing a small budget error like the UK in 2022. We are facing the systematic withdrawal of the second largest economy on earth from our debt market. China knows the history. They know what Eisenhower did to Britain. And they are slowly, methodically reversing the leverage. If we analyze these historical events, a clear pattern emerges. It is the death spiral of liquidity. It happens in 4 distinct stages. Stage 1 is the privilege. A dominant power borrows cheaply because everyone trusts their currency. They become complacent. They weaponize their currency, like sanctions, assuming the world has no other option. Stage 2 is the divergence. A major creditor like China today realizes the risk is too high or the political cost is too great. They decide to diversify. They stop buying the debt. Stage 3 is the liquidity vacuum. As the major buyer exits, liquidity dries up. Auctions for new debt become sloppy. The government has to offer much higher interest rates to find new buyers. And finally, stage 4, the crowd out. This is the kill shot. The interest payments on the national debt become so high that they crowd out everything else. Defense, education, infrastructure. The government has to borrow more just to pay the interest on the old loans. We are currently transitioning from stage 3 to stage 4. The US government is now spending more on interest payments than it spends on the entire national defense budget. We are borrowing to pay the credit card bill, and the one entity that used to give us a low interest rate, China, is walking away. So let's look at the numbers. China's holdings of US treasuries have dropped from a peak of over $1.3 trillion to roughly $770 billion today. That is a massive reduction. Why? The mainstream media will tell you it's just China defending the UN. And that is partially true. But look at what they are buying instead. China is buying gold, record amounts of gold. They are buying energy assets. They are lending to the global south in their own currency. They are building the BRICS payment system to bypass the dollar entirely. This is a strategic decoupling. China is de-risking from the United States. They saw what the US did to Russia in 2022, freezing $300 billion in reserves overnight. China looked at that and realized, if we go to war over Taiwan, our $800 billion in US treasuries becomes zero. So they are selling it now while they still can. But here is the terrifying question. If China sells $800 billion, who buys it? Japan? Japan is struggling to defend its own currency. They are selling treasuries too. Europe? They have their own recession to worry about. The BRICS nations? They are actively trying to destroy the dollar's dominance. That leaves only one buyer, you, or more accurately, the Federal Reserve, which claims to represent you. If the world won't buy US debt, the Fed will have to print the money to buy it themselves. This is called yield curve control, or QE infinity. And we know what happens when you print trillions of dollars to buy your own debt. You get the inflation of 2022, but on steroids. You get a currency crisis. You might be thinking, I don't own bonds. Why do I care if China sells them? Because the bond market is the gravity of the financial world. When bond yields rise, the 30-year fixed mortgage rate rises with it. We have already seen mortgage rates hit 7% and 8%. If China accelerates this dumping and the bond market panics like the UK in 2022, we could see the 10-year Treasury yield hit 6% or 7%. That translates to mortgage rates of 10% or 12%. At 10% mortgage rates, the US housing market freezes completely. Prices don't just dip, they crash. Commercial real estate, which is already on life support, would face a wave of defaults that would make 2008 look like a warm-up. This is the financial shock mentioned in our previous reports. It's not just about stock prices falling. It's about the cost of living becoming mathematically impossible for the 73% of Americans already living paycheck to paycheck. If the government has to pay 6% or 7% interest on $35 trillion of debt, the US dollar enters a death spiral. The government would be forced to print money simply to keep the lights on, destroying the purchasing power of your savings. China doesn't need to fire a missile to hurt America. They just need to stop signing the checks. They are removing the liquidity that has kept the American illusion alive for 30 years. The era of easy money is over. The exorbitant privilege of the US dollar relied on the cooperation of global powers who no longer wish to cooperate. We are witnessing the unwinding of the financial globalization that defined the last half-century. China is taking its chips off the table. They are preparing for a world where the dollar is no longer king. The question is not if the transition will happen, but how violent, financially speaking, it will be. For the average investor, the signal is clear. The risk-free asset is no longer risk-free. Diversification into hard assets, things that cannot be printed or defaulted on, has never been more critical. The financial map is being redrawn in real time. If you want to understand who holds the pen and where the safe harbors are, make sure you are subscribed to our channel. We will keep tracking the flow of money, even when it tries to move in silence. I'll see you in the next video.